Welcome to Alpha Recap, your aftermarket check-in from stockalpha.ai. We're wrapping up the key moves and analyst notes from the last session. As always, if you have questions, you can reach us at stockalpha.ai. And hey, you can ask us directly there. Let's dive.
Love it. Super excited to break this down. The last 24 hours were wild in parts. And honestly, I was a bit surprised by some of these gaps between price and analyst views.
Totally. So what really stands out here is Intel's one-day move. The stock jumped about 14% and finished the day at roughly $125, trading about 222 million shares. That's not a whisper, that's a megaphone.
Right, and the kicker was the disconnect with sell-side targets. Analysts' published target was around $75.64, which is a huge gulf to a $125 trade.
Yeah, that tracks. So you've got momentum and heavy volume on one side and the conservative or older analyst valuation on the other. That sets up a classic debate. Is the market pricing in fresh, durable info? Or is this a short-term sentiment spike?
Exactly. And remember, heavy volume matters. Analysts note that 222 million shares indicate more than a random pump. It could be real repositioning by big funds, options flows, or maybe short covering.
And to add to that, catalysts matter. If there were confirmed contract wins, margin inflection, or guidance changes, the price gap would make more sense. If not, mean reversion is very possible.
Hold on, say that again? So if Intel didn't announce fundamentals, we should be cautious?
Right. Analyst models can lag, or the market can overprice sentiment. Data suggests both are possible here.
Okay, moving on. There were also a cluster of upgrades and target bumps across big tech and industrials. Evercore nudged Cisco's target to about $110. Mizuho lifted Alphabet to about $460. Argus pushed Qualcomm to about $220, and BMO reiterated an outperform on Linde with a target near $560.
Those moves point to a re-rating theme in semiconductors, networking, and cloud exposure. Analysts are signaling they see better revenue mix and margin trajectories, cloud monetization for Alphabet, higher performance routing silicon for Cisco, and broader uses for Qualcomm beyond handsets.
I mean, when you step back and look at this, it's not just one-off optimism. It feels like a broader shift in expectations around multi-year structural improvements.
Right. And the other thing is, these target raises don't always come with a full-throated upgrade. For example, Morgan Stanley raised its target for Archer Daniels Midland to about $58 from about $54, but kept an underweight rating. That's a split signal.
Analysts were clear that price target increases can coexist with caution. That's an important nuance listeners should note.
Short interjection. Big move.
Small reaction. Wow, that's wild.
On the consumer side, Costco reported stronger than expected April sales. Net sales for the 4-week month ended May 3rd came in at roughly $24 billion, up about 13% year over year. And digital sales jumped nearly 19%.
That really underlines the membership model thesis. Analysts note membership renewal economics turn top-line strength into durable cash flow, which helps justify premium valuation for a company like Costco.
Yeah, absolutely. It's a good reminder that resilient consumer demand showed up in the numbers, not just the headlines.
Short reaction. Not what anyone expected.
We should also call out the microcap landmine. A tiny stock, ENGNW, plunged down about 48% to roughly 12 cents on thin volume, about 96,000 shares. That's textbook liquidity risk.
Yeah, microcaps can move on a whisper. For anyone holding speculative positions, position sizing and stop discipline are key. Analysts note these episodes amplify tail risk.
Let's synthesize the themes across the analyst notes and market action. First, there's a re-rating in select semiconductors and cloud exposure. Argus explicitly said Qualcomm's momentum extends beyond handset cycles, and Mizuho cited a stronger Google Cloud outlook for Alphabet.
Second theme, momentum versus valuation tension. Intel is the poster child. The market pushed price well ahead of consensus targets, which raises questions about durability.
Third, selective caution remains. Some firms raised targets but kept cautious ratings. Morgan Stanley on Archer Daniels Midland, and Ersta downgrading Verizon to hold because of earnings growth concerns. So not every target bump equals a bullish endorsement.
Fourth, resilient consumer demand. Costco's numbers show the membership model still works and digital uptake is meaningful.
And fifth, liquidity dynamics matter. Microcap volatility like ENGNW reminds us that low float magnifies moves and can double edge your P&L.
So, those are the headline themes. Now, let's walk through implications for different investor types.
Long-term growth investors. Analysts' upgrades on Alphabet, Qualcomm, and Cisco highlight secular opportunities: cloud, diversified semiconductor end markets, networking silicon. Analysts note durable changes in revenue mix could justify higher multiples, but execution and cyclicality remain watch points.
Value and income investors should pay attention to the cautionary notes. Verizon got downgraded to hold because earnings growth could lag peers, and Morgan Stanley's view on ADM shows target increases don't erase macro or operational concerns. Data suggests yield alone may not be enough if growth stalls.
Momentum and short-term traders saw opportunity in Intel's volume-backed surge, but analysts warn these moves can reverse without confirmed fundamentals. Meanwhile, microcaps are volatility playgrounds if you know what you're doing and respect liquidity.
Defensive investors got reinforcement from Costco and Lindy. Recurring revenue models and industrial pricing power showed up in the notes. Those are classic quality characteristics.
Quick tactical watch list as markets reopen. Validate catalysts behind Intel's move by checking SEC filings, company statements, and event calendars. Track cloud and networking earnings flow. Alphabet and Cisco upgrades put those sectors front and center.
Also, watch guidance versus headline price targets. When a firm raises a target but keeps a cautious rating, dig into assumptions around margins, commodity exposure, and capital allocation.
And for small caps, maintain liquidity discipline. ENGNW's one-day collapse is a reminder. Small float equals big moves.
So to wrap, here are your clear takeaways. 1. The market showed selective re-rating, where analysts see structural improvements, especially in cloud, networking silicon, and diversified semiconductor exposure. 2. Single-day volume spikes like Intel's can reflect real repositioning, but they can also be sentiment-driven and may not align with published targets. 3. Not all target increases equal bullish ratings. Read the nuance. 4. Resilient consumer behavior and the membership model keep Costco in the quality conversation. 5. Liquidity risk in microcaps remains a live danger.
This synthesis is informational and does not constitute investment advice. Analysts note that price target movements reflect forward expectations and assumptions that merit independent review.
If you want to dig deeper or ask about any of the names we discussed, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening to Alpha Recap. We'll be back after the next close with more color on earnings and market flows. Bye for now.